A savings account is one of the great ways to put your cushion money or the money that you will need in the short term to work for you without risking it in the stock market. Some online savings account can have annual percentage yield that is more than 15 times the national average of 0.06%. If you are interested in growing your savings, you are in the right video. Just quickly like the video and let's go for it. Hey there, Stockspert here. On this channel I share with my experience and educational videos on personal finance and investments. You can always find my other videos on the channel's page and you may want to subscribe for more in the future. And if you haven't made any investments yet, make your first investments right now. Invest your click into the like button and I'll do my best to return your investments by quality insights. So how does a savings account work? A savings account is a type of bank account that enables to earn an interest on your money in exchange for a limited access to it. You can put as much money as you would like to a savings account, but if you are in the United States, by federal law, you can only make up to 6 free withdrawals within months, and exceeding this amount could result in extra fees. Banks use your savings to help fund loans for other customers. Borrowers must pay back what they borrowed with interest, and your bank passes along some of those earnings to you in the form of interest to your saving account. A larger balance or a higher savings account interest rate result in more interest. While saving accounts may have monthly maintenance fees, and they usually do not include ATM cards or check writing capabilities. So if you want to withdraw from your account, you must do so via automatic bill pay or transfer the funds to a linked checking account. Like other types of deposit accounts, traditional savings account and online savings account are typically backed by the Federal Deposit Insurance Corporation. This protects your money up to $250,000 per person per bank against bank failure. So if your bank goes under and you have not more than $250,000, you won't lose all of your hard-earned cash. You might think, what is the difference between online saving accounts and traditional savings accounts? Traditional savings accounts are typically those which are offered by a brick-and-mortar bank. Online savings accounts don't have the overhead of running a physical location of bank, so they can pass on their savings to interest rate. The best online savings accounts are usually high interest yield, earning more than traditional savings accounts. Early on, many bank customers were concerned about the possibility of hackers gaining access to their information. To attract deposits, online banks responded by offering interest rates that brick-and-mortar banks couldn't match. Now, the banking world has turned upside down. Many people prefer the convenience of online banking. So much so that even traditional brick-and-mortar banks have had to create online system to give their customers the same service that online banks have always provided. Here are some of the key differences between online banks and brick-and-mortar banks as they pertain to savings account. The first is interest rate. The best online banks still offer far better rates than their brick-and-mortar counterparts, especially on basic savings account. Many of the brick-and-mortar banks pay next to nothing in interest, relying on other features to bring customers in. Second is hours of operation. Online banks are always available to conduct regular business. You don't have to worry about branch location hours or what transaction your brick-and-mortar bank will let you do through an ATM. And third is ATM network. Brick-and-mortar banks have extensive networks of proprietary ATMs that most online banks don't have. However, many online banks offer rebates for ATM fees that you might have to pay to use another bank's ATM. Next one is customer service. Online banks typically have call centers that provide service on an extended schedule, with a few giving their customers support 24/7. Some also offer an online chat assistance. However, no online bank can match the in-person relationships brick-and-mortar banks rely on as their main competitive advantage against their internet-based rivals. Another difference is on account access. Most online bank transactions require customers to transfer funds electronically, which typically takes a couple of days to complete. Wire transfers are available for more time-critical needs, but you'll often pay an extra fee. When you need quick access to your money that goes beyond what an ATM can provide, brick-and-mortar banks give you an opportunity to go to a branch and immediately withdraw as much as you need in whatever forms work best. Whether you prefer brick-and-mortar bank or online bank depends on what's most important to you. Unless it's really important to you to go to a branch and speak to a live person, an online bank should be able to satisfy your needs in most of the time while enabling you to earn a higher percentage yield in the process. Here are a couple of terms that you should know if you want to open a savings account. All of these terms are important for online savings account, traditional savings account, and high-yield savings account. As I was saying above, the first one is APY. This stands for annual percentage yield. People often use this term interchangeably with interest rate, but the two aren't exactly the same. APY takes into account how often interest compounds, in addition to the actual interest rate. A higher APY means more interest for you. Another important term is monthly maintenance fee. This is a fee your bank charges you to maintain your savings account. Some banks, especially the online ones, don't charge, and others will waive it if you meet certain requirements. And liquidity. This refers to how easy it is to turn your money into cash. Highly liquid accounts make this simple, while low liquidity accounts make it a lot more challenging to get cash when you need it. And the main thing is, what should you consider before choosing a savings account, and what should you look for? The best savings account, either it's online or a traditional savings account, will meet the following criteria. The first is FDIC insurance. Most banks should offer FDIC insurance. It's not likely you'll ever use it, but you don't want to get caught without it. If your bank fails and your money is not insured, you lose your money. The second is high APY. APYs fluctuate from bank to bank and over time, so there is no solid definition of a high APY. You don't need the highest interest rate that is available now, but you may want to choose one that's close to the highest around. This will earn you more interest. And low fees. Fees can eat into your profits and possibly cost you more than that you are earning in the interest. Check your bank's fee schedule to learn about any costs associated with your account and avoid a monthly maintenance fee if you can. Another thing to consider is accessibility. Check with the bank to learn more about the ways you can deposit money into and withdraw it from your savings account, and make sure you are comfortable with them. You likely also want a bank with online portal or a mobile app for managing your funds remotely. And here's a popular question that I heard a lot, which is, what should I use a savings account for? A savings account is a good place for money that you don't need for everyday spending, but you want to have quick access to it. You can keep your emergency fund in a savings account, as well as money you are saving for a large purchase in the next few years. Investing these funds is usually not a good idea, while there is a chance that you could earn more money than you would with an online or high-yield savings account. But there is also a risk of losing your money when investing, particularly over the short term. You could be forced to sell your assets at a loss when you need money, and even then it takes some time to get the funds you need. With a savings account, it's always right there when you need it. Savings accounts aren't good places for money that you plan to use for everyday spending, because withdrawals in excess of 6 per month could bring extra fees. They are also not the best choice for money you don't plan to use for 5 years or decades, because savings account interest rates are usually lower than you could earn from investing. One of these other bank accounts, if all I told about savings account doesn't sound like a good fit for you, here are some other types of bank accounts that might suit you. One of them is CD accounts, which means a certificate of deposit. This is a special type of savings account that offers a higher interest rate than usual savings account, but doesn't allow you to access your funds and earnings for a set number of months or years. If you withdraw this money before the deadline, you will pay a penalty in lost interest. Another type of account is money market accounts. Money market accounts offer the high interest rates you'll find with savings account and CD accounts, as well as some checking accounts feature. Some offer ATM cards and checks so you can withdraw funds directly from this account, though you are still limited to 6 withdrawals per month. And the last one is checking account. Checking accounts rarely earn interest, and when they do, their rates are usually lower than savings account. But checking accounts have no restrictions on withdrawals, and most include ATM cards and checks for an easy access. If you decided to open a saving account, here's how to do it either online or in person. You can open a savings account by visiting a bank if your chosen bank have one, or fill out an online application form. You'll need to provide some personal information, including your name, your address, social security number, a government-issued ID like driver's license or passport. If you are opening a joint savings account, both parties will need to provide this information. Your bank may also require a minimum deposit to open an account. If you are transferring the funds from another bank's account, you'll need to know its routing and account number. So again, ideally, you should keep your emergency fund in your savings account, as well as any money you are saving for a large purchase within the next few years. And even more ideally, I would suggest to get rid of all your debts, save a cushion money, and start investing, which could give a lot more than the savings account. You ask me how? Here's a playlist about investing for beginners, where you can get to know everything about what is the stock market, how does it work, how to get started investing in stocks, and all about that. Just click on it and it'll change your life from now on. And of course, make sure to subscribe to the channel, like the video, and hit the notification bell. See you in the next video.